Today's topic, we'll be looking at questions related to boards of investment funds and investment fund managers, and how to deal with various challenges that have been arising as a result of the coronavirus crisis. So I'm Monique Bachner, and I'm a board member of ILA, and I'll be hosting today. Just as a background, since it's our first one, ILA is a membership organization aiming to promote best practices in Luxembourg in the field of corporate governance. And so here we're obviously trying to extend that from our normal service to members to also times of crisis. And we've got various working groups which have responded to the crisis and who are writing and preparing different matters. And this is the first one to come to you. And this is from ILA's Investment Fund Committee and the Alternative Task Force, who are publishing a guide identifying key topics which funds should consider in this context. The guide should be online tomorrow on a new COVID section of the ILA website. I'll mention that again at the end. So today we have with us three speakers who will take us through the different topics. So we have Yann, who's a regulatory expert at MEBS, ME Business Solutions, who provides governance solutions to IFM and funds and across the financial sector. Yann is specialized in governance, compliance, and regulatory matters, and is also co-chairman of the ILA Alternatives Task Force, as well as other positions such as co-chairman of ALFI's LTIF working group and active in other bodies such as ALCO. We have Keith Burman, who's an independent non-director for a number of cross-border real estate, private debt, and infrastructure funds. He's held previously executive management roles in Luxembourg management companies and PSF, and is an ILA certified director. Keith also sits on the Alternative Funds Task Force at ILA. So Joachim Kuske, who is an independent director, he worked as a lawyer in major Luxembourg law firm and was a member of the board of Luxembourg-based management company. Joachim is a member of ILA's Legal and Regulatory Committee. So all of those have been very active in the Luxembourg fund governance communities and also within ILA. So the webinar will take the form of a discussion with our panelists on various topical issues. It will be brief, it will be high level. On certain issues where there will be warrants more detail, we have got some webinars and other documents that are being prepared. And obviously the document that will be on the ILA website, which will give you further reading and resources. Viewers can also ask questions. There's a chat function which you can open on your screens. We ask you to stay mute, please, through the whole seminar, unless we ask you to unmute at the end. So please stay mute. If you have questions, please send them through the chat function in writing during the seminar. We will collect them and we will address them if we have time and try to bunch some of them together. Last but not least, obviously this is not legal advice. This is a high-level discussion between different industry actors to help boards think about topical issues. But if you need to act on any of them, please contact your lawyers and get more detailed and specific advice. So let's get started. So first of all, let's just start with a wide open question, and maybe I'll throw this one out to Keith and Yann. Both fund managers and boards of fund managers and boards of funds should consider defining some sort of strategic approach as a board in these times of crisis. What is the role of the board in this time of crisis, and what should these boards be doing?
Well, if I start, I think the key issue is that COVID-19 has grown from being something that was happening in China and therefore affected a few people, but not particularly European countries. It's now a global pandemic. 150 countries have reported cases. And so I don't think anyone in any line of business, be it funds or anything else, can claim that they're not somehow affected. And so the whole question of over and above just the immediate short-term need of how do you telework and so on, I think boards need to look at this for their whole business model and their whole business, and think about the strategic implications of COVID-19, their ability to carry out their business on an ongoing basis, the strategy that they have got defined in their documents, whether that's still able to be delivered in the same way. And if the answers to that are no, then start already now those processes to alter that, to give themselves the flexibility to react in the best way for their investors. And I think that, I don't think this is going to disappear anytime in the next couple of weeks. I know we have deadlines that are 2 weeks, 4 weeks ahead. This is going to be with us for many months. So you need to really take a long-term view rather than just the short-term market.
I think the challenge for board members as well is to make sure that all of the issues that are raised by the coronavirus pandemic are identified. So I would suggest that one way of thinking about it is, what sort of report would you be expecting as a board or as a board member, say from senior management or the investment fund manager, about what measures have been put in place in response to the coronavirus pandemic? What sort of reporting might you be providing to investors? How would you respond to the authorities if they asked you for a report about what measures you put in place in response to the coronavirus pandemic? So the way that I would see this morning's coffee chat is really about identifying some of those key issues so that you can take action if relevant to you on those key issues.
Thank you. I think we'll come back to this at the end because we're going through a lot of specific items during the question time, and we can perhaps catch up whatever we've missed at the end. So moving on, obviously we've got a lot of people working from home, and this is causing various challenges for the IT departments in particular, and different policies and procedures. Keith, perhaps you can just share with us a little bit about IT security while people from the financial sector, and particularly the boards and of these funds and mancos, but also the people who are working for them, are working from home.
Sure. In the past, there's been a fairly restrictive view on working from home in Luxembourg to do with data security and integrity. We've seen the CSSF react quickly in the crisis and release guidance saying that they would prefer businesses to have people working from home for public health and public safety point of view. And so therefore they've acknowledged that businesses should implement plans, which is a change from before, to allow people to work from home widely. However, they have also reminded businesses that despite this relaxation in terms of prior approval, they still expect businesses to have the same approach to ensuring security. And so therefore, assessment of your tools, assessment of your cloud computing requirements and so on, still has to be carried out in the same way so that you're not taking unnecessary risks with your business and your communication security. So I'm not going to go into that in detail, but if people haven't looked at it, there are circulars or press releases on the CSSF website which give some clarity as to what sort of relaxation they're talking about.
Okay, and how do you think that extends to the board members themselves, since a lot of the firms seem to be quite good at thinking about locking down and cybersecurity for their employees? Do you think they're doing enough in terms of making sure that their board members are doing the same?
Simple answer, no. I mean, depends. Some of my clients, I'm integrated into their own internal networks as an external contractor, and therefore I'm fully within their web, and I log in via Citrix to their environment in order to access data. For other clients, we carrying on as before. I receive things via email, and the halfway house is using a board portal of some form, such as Diligent or Board Packs or one of those, to receive documentation and communicate. I'm sure there's a lot more demand at the Board Pack software provider level right now, and certainly some of my clients have leapt into action when they've only been thinking about it in the past. But no, I don't think we do enough practically. And I think that every individual board member needs to think a bit harder about how they're receiving and storing documents. Have they enabled full disk encryption on their own machines now because they're receiving more documents than perhaps they did previously, and so on. There are tools available to each of us individually, but not necessarily turned on.
Okay.
Can't hear you, Monique.
Sorry, part of what the CSSF has said is that entities should ensure that the IT security arrangements in place are adequate. So obviously that goes beyond sort of VPNs and monitoring and access connections, and extends also to things like data security and data protection. In terms of those, Yann, what do you have to add?
Well, I mean, I'd like to point out that it seems to me that the employees of managers and service providers have, to a certain extent, been put into the position of board members, as Keith was describing previously. So they've moved, what we are serving, investment fund managers, service providers are serving, the employees are serving from their homes. So they've brought all of that data into their homes. And so we have the IT security aspect of the communication, but we also have the aspect of, well, we have all of this data on our screens at home. We're possibly printing out confidential documents, professional documents at home. So there is a concern around managing that, as directors have to do on a day-to-day basis. And so I think directors might be considering asking organizations, the investment fund manager, the service providers, what are they doing to mitigate the risk? There is another thing that I'd like to add as well. We are also communicating over platforms that we don't tend to use on a day-to-day basis for professional needs, and even talking about potentially confidential topics over platforms that we don't tend to use, like this one here, like Zoom that we're using today. So that also raises some data security issues around the confidential data of investment fund managers and service providers.
Yeah, I agree. People really need to look into the platforms that they're using and understand the terms and conditions. You can't just go and use any type of file sharing service or even video conference service if you don't know what you are signing up to. Even with different subscriptions, sometimes you get more or less security, and you need to understand password and private rooms and make sure that all those security settings have been enabled. And I think that that's somewhere where boards really should be challenging their entities when they're putting new systems in place, as to what level of protection there is, and has that due diligence been done. But obviously the directors need to be doing that themselves in terms of their own communications, in terms of recommending different services. Yeah. So, that's sort of data protection. But what about, data security, but what a bit more about data protection? Joachim, I think you just tried to jump in.
Yeah. I just wanted to jump in here. I mean, the rules of the General Data Protection Regulation, the GDPR, they will still remain applicable. So that's also an additional challenge, that you have probably a data protection policy in place at the level of your company, which you should still abide to. And if you need to derogate to it, you should take really conscious decision and explain why there should be derogation. But nevertheless, you really need to analyze what personal data might transit via those tools, what will be exchanged, confidentiality, client information, names, etc., everything that is explained in the GDPR will still remain applicable. This now is the situation if you use some providers which are based within the European Union or the European Economic Area. But imagine you use providers like Zoom, for instance, who are based in the US. So you have a whole new array of questions that will arise. You will potentially transfer personal data outside of the EEA, and you must make sure, theoretically, that this data is handled in adequacy with the rules of the GDPR. So that's something in addition to take into consideration, to be very, very careful when using such tools and exchanging information on them, particular documented information.
Yeah, and I would add to that, exchanging information. I think that, you know, most of those who work in the financial sector are quite good with their, you know, actual mandates. But, you know, remember that also if you're starting to share with other directors or in other contexts via Dropbox or other file sharing services there as well, you need to make sure that you're checking yourself the terms and conditions. Usually your firm should not be using those types of services because the terms and conditions are considered not sufficient. But that brings us on. Yes, Yann?
There's a specific issue in relation to employee data as well, and in relation to the virus. So the National Data Protection Commission of Luxembourg has issued some guidelines about what sort of data can be stored and what sort of data cannot be stored in relation to employees and, you know, whether they have the coronavirus or not and their symptoms and so on. So I just wanted to point out that there is also a specific data protection issue around collecting data on the health of employees in the context of this crisis. Yeah.
Yeah, and I guess everyone should also remain vigilant to fraud matters like phishing more so than ever. But moving on to tax situation of the telework, I think that people have heard about different opinions on this and the local countries around us. Yann, do you want to give a little bit more light on how this affects funds and particularly the boards of the funds and the IFM, where people are working across the border?
As you may be aware, there are limits to the number of days that an employee can work from home, shall we say, on a cross-border basis. So an employee in France, Belgium, or Germany can work from home. So in the context of the coronavirus, it has been decided together with the French and the Belgian authorities that the current situation is considered as a case of force majeure. And the limit to the number of days that an employee can work from France or Belgium will be suspended for the period of the lockdown, the coronavirus lockdown. I understand that there are also discussions going on with Germany in a similar regard. So that enables employees to work on a cross-border basis. So that, shall we say, solves the tax problem for employees working on a cross-border basis in the surrounding countries during the period of the lockdown.
So I guess it's the same for boards and the board meetings, you know, that can help for the directors themselves. I have understood that there are some challenges still, you know, given the international environment that Luxembourg works in, that other countries may not take the same view. Joachim, do you want to share a little bit on that?
Yeah, I mean, we all know that there's specific challenges in relation to the United Kingdom, where we board members normally try to avoid taking any decisions or acting in any management capacity out of the United Kingdom. And those rules, to my understanding, have not been waived. So even while everyone now is confined and boards might need to convene via teleconferences or video conferences with directors being physically located in the UK, there is still a risk that the UK tax authorities might consider that suddenly the central management and control of the fund is in the UK, and hence UK corporate tax might apply to such funds. So it's really something to be very, very careful and to discuss with a great degree of urgency, if not already done, with your UK tax advisors or legal advisors to see how those things can be addressed. In practice, one might make a distinction where the board member based in the UK will not participate to a meeting, but only assist in a meeting, so be taking a passive role, or he might issue a proxy, or simply not be attending, although being invited to the meeting. There are several ways, perhaps, how to address it. None of them, of course, are perfect, but it's something to be really carefully considered. On one side for UK corporate tax, but also there might be VAT implications if the fund is deemed to have a place of belonging in the UK. So there are things to be really careful of, and not just jump into the first video conference with your UK-based directors.
Yeah, I mean, we'll talk a bit more about virtual meetings later in the chat, but this brings up already the question of business continuity at board level, and perhaps one or more of the members being unable to perform their duties because of their location, or because they get sick. They might have the virus and be hospitalized. What sort of solutions would you be recommending to boards to prepare for that?
I mean, it depends, of course, on the setup, on the composition of your board. But there might be solutions in terms of perhaps setting up specific subcommittees at board level, composed jointly with board members and perhaps also members of senior management, at least to allow for a continuation of ongoing affairs. Other solutions might be to issue a proxy by which then later on which takes a generic form, which later on you will, once you have recovered, you will ratify. So I think it's really a thing of looking into it in greater detail, and we cannot go into too much of the detail at this stage here, but there are certainly things that can be discussed and can be put in place to ensure continuity. It also should be seen what is the number of board members. If you're, of course, at a higher risk, if you have only a board of 3 people, and if suddenly 2 board members become sick, I mean, then you're a different situation than if you have a board which is composed of 5 or 6 members, by which you might always still be able to reach a quorum. Other solutions might be, doing things via video conference or teleconference, and we will talk at a later stage also about this Grand Ducal regulation that now allows every company, notwithstanding any provision in the articles, to do meetings via telephone conference or video conference. So there are different solutions in the way, but I think a board is well advised to look into this proactively now, when everyone is hopefully still in a good, healthy condition, than rather wait when suddenly people are getting carried to the hospital. So it's perhaps good to have a business continuity plan at board level in the drawer, should the worst situation arrive, that you can then activate it and will be able to perform still as a board.
Okay, thank you. I have one question from the audience. So if I can just put that to you, which is about UK location issue that we brought up before. And somebody was asking about the reasonableness of having 1 or 2 meetings where somebody from the UK dials in. I think usually, the lawyers and the general position is that, you have to look at the balance of, activities, and overall, is that all pointing to Luxembourg? Do you have anything to add on that specific question about, if somebody can dial in, from time to time, or is it really sort of particularly for those more risky jurisdictions like the UK with more aggressive positions that they just shouldn't do it?
I mean, I have to make a big disclaimer here. I mean, I'm not sufficiently knowledgeable about UK law, UK tax law, and practice of any administrations there. But I could imagine, but this is really just me personally speaking now, that should those discussions ever come up in the near future, it's probably likely that also the UK tax authorities might take a bit more of a flexible view, taking into account the current situation. But this is just my assumption, but I would definitely advise to, if this should happen, to put it in the minutes and explain why this was done now in light of these particular circumstances. I think that's a very important thing, putting things in minutes, explaining why you derogate to established practices and the considerations that you gave it, why you chose to deviate from a normally established practice. So that would be my advice. But again, it's probably it's better to check with specialists on the other side of the channel.
Yeah,
I would agree with that. Exactly that, making sure that you state at the start of every board meeting that you're doing this as a temporary measure in response to the public health restrictions that have been put down and the restrictions on travel, and that you will revert to the normal practice with everyone attending in person and so on as soon as you can. That way, if you ever have to get into that future discussion, with a tax authority, you can point clearly the link was made to the public health emergency. I would mention it's not just the UK. For example, the German permanent establishment issue and trade tax also applies. So having people execute documents or sign leases and so on in Germany for Luxembourg companies is also a risk. So they're a proxy to a Luxembourg-based person to execute those leases, for example, may be a way to avoid that risk. Again, the German authorities may be proven to be reasonable at the time this comes up, but in 12 or 18 months' time, when this might get tested, it's too long after the fact to have changed anything. So perhaps a bit of forethinking now will save a bit of pain later.
Yeah, which brings us into another interesting topic, which is the signing of documents generally. And you know, to what extent should boards be reviewing their signing arrangements across the board and more generally?
Well, I think this is actually a great opportunity in that sense to move to adopt modern signature practices. Europe has implemented e-signing directives for the last 20 years, and indeed updated that, I think, in 2015 with the EIDAS regulation, which has implemented a common standard across Europe, but it hasn't really been adopted widely for a lot of reasons. But so the legal framework is there, but participants and counterparties need to pick it up and start using it. And so, again, without conscious of our time, I won't go into that in a lot of detail, but certainly there is a European framework. There is a type of electronic signature that is by European regulation equivalent to a handwritten signature, except in specific circumstances, such as in Luxembourg, going before a notary. So for anything else, companies are perfectly able to agree between themselves to accept electronic signatures, but they have to put that in place as a practice. So I'd say for boards, now's the time to say, right, let's look at that carefully. Let's agree what categories of document we now will just rely entirely on a electronic signature. I'd say if these are contracts and such like, you want to have a platform that gives you an audit trail as to how things were signed, rather than just relying on a simple exchange of emails. The platform idea would be preferable, but the exchange of emails is legally capable of meeting the standard with a little bit of work. So I think we should do that. I think Luxembourg as a whole should be pushing this, not just for now for the crisis, but actually to move fully into the 21st century. We should be adopting e-signing practices wherever possible.
Yeah. So just for viewers, in the interest of time, we will be organizing a webinar specifically on this topic, so that we'll go into more detail. But if you want to read up in the meantime, there's some great documents, for example, on the Lux Trust site. If you look up e-signing and qualified electronic signature, so that you can understand a little bit what the difference between the different types of signatures. Joachim, in terms of contracts, so beyond signing, there might be problems with force majeure or just generally struggling to meet contractual obligations. Some countries, it seems to be a different point of view in different countries as to whether this virus situation might be a force majeure situation or not. Do you have any thoughts on that?
Yeah, thank you. I guess the discussion about force majeure is as diversified as the laws to which our contracts are subject. So I think the first comment I would like to make is look at the applicable law to your contract. And then again, the concepts might be considerably varying among the jurisdictions. And I can only talk now about the situation in Luxembourg, where we have a definition of the force majeure in our civil code, which is quite a clear statement. So the 3 criteria need to be fulfilled. It must be external, unpredictable, and unavoidable. So this is the first test that you should do. And now specifically to coronavirus itself, one might be tempted by the conclusion, yes, of course, it was totally external, unpredictable, unavoidable. But then on the other hand, I mean, this has been going on now for a couple of months. So if you should ever be running into discussion, someone might tell you, yes, but you knew it already for a couple of of weeks or months, so that something might be coming. So you should have anticipated that. And the second test might be, okay, the government came up on Sunday, suddenly restricting movement, etc., and postponing to a certain extent public life and potential execution of contracts. Yes, again, but then we come to a second element that has been introduced by case law, which says that actually once you have a case force majeure event, you also need to prove, and now I'm quoting, the absolute impossibility for your counterparty to meet his contractual obligations, and the direct link between the impossibility of executing your contractual obligations and the government measures. So this will be something that, in my opinion, is going to be very hard to assess, at least under Luxembourg law. But I mean, we will only be able to say this in the future, should ever any cases come to court. So this is a very theoretical answer now, but I think just judging and say, okay, easy, we can waive our contractual obligations by saying it's force majeure, I think that is a bit too easy, unfortunately. And I would think that a board at this stage, the first thing would be well advised to honor its contracts as if nothing has happened, perhaps taking into consideration that things are getting a bit more difficult, things might be a bit postponed, but simply totally stepping out of a contractual obligation based on this COVID situation, in my opinion, is a bit too ambitious.
Okay, thanks. And I guess people should also just check their contracts, get their lawyers to check the contractual language in case there's something that's more beneficial or different in the contracts themselves. And don't forget that operating cross-border, you need to check multiple countries probably.
Yes, if I might perhaps just add, you might have some covenants in agreements that might need to be met. Now using the force majeure argument might be a bit too strong, but you might really look at those covenants. Will you still be able to meet them? And if not, reach out to your counterparties and try to negotiate something. And I think, again, being proactive is probably the best thing to do than rather afterwards being reactive. I think then you are driven and you have less options as a board than just now stepping up and starting a discussion with your counterparties. That would be my advice.
Thanks. So we did talk a little bit before about virtual meetings and board continuity. But virtual meetings is not just for boards, it's also for general meetings and of shareholders or also of bondholders. What are your opinions on what the government has come out with about virtual meetings generally, and any tips for boards in perhaps the AGM season coming up for holding general meetings?
Yes, so I guess that's for me. Yeah, I mean, the Luxembourg government has published a Grand Ducal regulation on 20th of March that introduces a high amount of flexibility in holding general meetings and also board meetings. I have to say, most articles of incorporation of more recent companies, they nevertheless already provide for those flexibilities. And those flexibilities are that you can hold meetings of shareholders exclusively by distance voting or in writing or in electronic form, by a proxy that has been designated by the company or by video conference. But for the shareholder meetings, I would suggest to put this specific situation also in the convening notice. So explaining shareholders why you derogate from what has been done in the past, where you normally would convene them and ask them to sign a proxy form if they could not physically attend. But when now the board takes a decision, we will not even convene people to physically come to Luxembourg or give them the possibility to do so. Explain why you do it, and probably also make a reference to the Grand Ducal regulation so people see that this is also done at the initiative of the Luxembourg government. So I think it's always important to explain why you take some decisions. Then board meetings, yes, I mean, most articles provide for the possibility for circular resolutions. to be used by boards, or video conferences, telephone conferences. This type of tools, I think they are quite established. One might now get into the discussion, how about substance? How can we justify substance in Luxembourg when we only take decisions by circular resolutions? And I guess, again, here it is putting it then in the circular resolution that in light of the sanitary crisis that we're currently facing, we do not do physical meetings or telephone conferences or so, but we rather go by circular resolutions, also for the interest of time, perhaps. So it depends really on the situation, but being as transparent as possible in your documents, in the minutes, I think would be a very good advice. And also, the thing is, you are allowed to postpone shareholder meetings up to 30th of June this year, but subject to giving adequate information to shareholders 3 days prior to the date of the initially scheduled annual general meeting. So this is also some flexibility that is given by this Grand Ducal regulation, which will allow to certain situations to extend to a later point the date of the annual general meeting.
Thank you, Joachim. Just to address a question from the audience about procedures for noting where attendance at meetings, I guess we would just answer to that the same as what was discussed before, which is, write it in your minutes, who has joined from where. You can even do a screenshot of who was on your call. There's different ways you can be creative about noting who has been on a board call. But yeah, you might want to start asking people where they are dialing from, because they might not be in the obvious locations. They might be hidden away at their country house rather than their primary residence. But when you do all of that, just do be aware of GDPR implications and privacy. So moving on a little bit, because we are running out of time, we might need to do a second one of these. Liquidity risk management. Yann, maybe you can deal a little bit with liquidity management measures and the adequacy of those, especially in light of redemption requests or other things that might be going on.
Yes, thank you very much, Monique. I think risk management is a whole topic that would be worth covering it in a separate session. All I wanted to point out was, obviously, in terms of liquidity risk management, there are really two aspects to this. One is investor liquidity risk management, and the other one is the fund liquidity risk management. Now, there are big potential issues coming up for open-ended funds and semi-open-ended funds in terms of investor liquidity risk. So boards may want to look at the liquidity risk management measures that are in place, review those, see whether they're adequate, and obviously, consider their implementation if they start running into liquidity issues. If they do start implementing liquidity risk management measures that are foreseen in the prospectus, they will need to notify the CSSF, they will need to notify investors and service providers of that. Things like NAV suspension, gates, things like that.
Okay, and so similar to that, in terms of liquidity, there might be issues on affecting the strategy and other funding. Keith, do you have anything to add?
Sure. I mean, we talked there specifically about open-ended funds because they're particularly at risk from the investor needing liquidity. But all types of funds have business plans to implement and interest to pay and counterparties margin calls to meet and so on. So there's a need to look very closely at cash flow and adjust your business plan in light of the crisis, because what you anticipated being able to do, the dividends you thought you could pay every quarter, is that now the best plan given the current situation? Should you be hoarding your cash in order to meet perhaps an extended period where your underlying counterparties are unable to pay you the dividends or the rent that you're due, and therefore there's a knock-on effect of your ability to implement capital expenditure or loan repayment requirements. So what I'm seeing is that people are starting to question dividends because those tend to be discretionary, and perhaps postponing the dividend discussions until it's a bit clearer where the crisis is going to lead us to and how long it's going to take. What we've seen in the UK on the investor liquidity side, a linked valuation. The FCA has required, I believe actually, any retail property funds that have material uncertainty raised over more than 20% of their assets to suspend. That's retail funds and retail in the sense of retail investors. But some of the institutional funds have also suspended on a similar basis. So this is a key thing where, because there's uncertainty as to the pricing of the portfolio, that may lead you to conclude that it's unwise to strike a NAV and to price subscriptions or redemptions at the moment.
Okay, thank you. And so I guess that goes to just generally, adapting and making sure that one is applying the requirements of one's risk management plan and reacting accordingly.
Well, the CSSF has been, and IOSCO and others have been saying we need to stress test our liquidity models. We're now in the middle of a very severe stress test of those models, and you need to be adapting that and rolling it out. It's also worth remembering that even if your fund is doing fine and your asset values are holding up, you may still get redemption requests from investors that need liquidity for other reasons completely unrelated to the performance of your fund. We saw that in the GFC when, because investors that were invested in multiple asset classes needed liquidity in one sector, they were taking it out of other sectors that were still robust. Alternatively, they're also looking at their weightings between the different asset classes. And if the equity markets have fallen by 30% as they have, you may, as an investor now, be significantly overweight in your alternative allocations and look to withdraw capital where you can. And that's got nothing to do with how well the funds are doing.
Yeah, which brings us to the question of valuations. What should boards be looking at in terms of valuations if there's a lot of volatility?
The key question, I think, on valuation is whether you are getting sufficiently good valuations in order to construct a NAV that is going to be fair to all investors, both those in the fund, those that are leaving the fund, those that might be coming into the fund. And if you don't feel that pricing that NAV on whatever periodicity you're talking about, be it daily, monthly, quarterly, if that's not going to be reliable and is not going to be treating all investors fairly, whatever situation they're in, then you have to seriously consider suspension. That's different to taking a redemption request that can be deferred for some reason because of your documents. That's more of a cash flow issue. It's not a valuation uncertainty issue. But my understanding in the real estate sector, at least, is that all of the big valuers are now inserting material uncertainty clauses across their entire valuation portfolio, which doesn't mean that they're unwilling to give you a valuation, but they're saying this is much less reliable than it would be in normal circumstances. And they can back that up by the fact that there are many fewer transactions going on at the moment, understandably, because everyone is holding fire. And therefore the data that valuers in the liquid asset classes would use to back up their opinions of value is not there.
Okay, thank you. Which then brings us to the question perhaps of disclosures. So if valuations are changing, if there's a lot of uncertainty, I mean, we are coming to the part of the year where many funds will be approving their annual statements. Maybe back to you, both Yann and Joachim. What sort of disclosures should issuers or funds, IFM to their shareholders be making, whether it's via the financial statements or just generally?
Yeah, thank you, Monique. Very good question. I think that the answer is probably consider both. Consider whether it's appropriate making ad hoc disclosure now, shall we say, to investors, and also consider what sort of disclosure you're going to make about this crisis in the financial reports. So those financial reports for 2019, which are not yet finalized, obviously review also the disclosures made in those financial reports and update them in relation to the impact of the coronavirus. So find some wording to describe the expected impact of the coronavirus. Yes, absolutely.
Yeah, Yann,
Yeah.
if I may add, I mean, there has been clear communication from the IRE, the Institut des Revisions d'Entreprise, requiring that annual accounts contain specific wording on this sanitary crisis. So there has been some instructions given by the self-regulating body. And I totally agree with you. I mean, again, the board should be proactive. The board should communicate to its investors in the annual reports, also perhaps by way of, whenever possible, updating the offering documents, subscription documents, putting in risk warnings on the sanitary crisis. But this is more of a static information. One might also perhaps think that the board will reach out to investors via a letter, via an investor call, via publications on the website. Some form of communication should be considered by the board, of course, depending on the type of investors that you're having, the type of investments that you have done, the type of vehicle that you're sitting on the board of. But the board should really take matters in its hand and at least discuss it at board level. And taking into account when the board should talk, I mean, if the company is listed on a stock exchange, I mean, one should also not forget the market abuse regulation, which has not been waived. So there are things you should pay attention to when you communicate to your investors, when you take decisions, when you make publications, that the MAR will remain applicable. And we cannot go into this detail now, but just keep in mind that there are some considerations like that. Perhaps if I may just add to this, that to the annual accounts, that there has been a bill of law that has been deposited at the end of March, which provides for an extension of 3 months for the finalization and publication of the annual accounts for financial year ends that ended after mid-August 2019. So if this bill goes through, and I think the legislator has been very active over the last days, so it's quite likely that it will go through, any financial year ends after mid-August 2019 will benefit from this 3 months extension. So accounts would not need to be ready by 30th of June if you have a year end 31st of December, but could then be ready by the 30th of September only. So that's also interesting information, and I'm sure that we will be able to communicate as soon as this bill of law has passed Parliament.
Okay, and I understood in a similar vein that the Luxembourg Business Register as well has got extensions for the filing of accounts.
Yes, this is just an administrative easing measure. So long as the bill of law has not gone through, you would still violate Luxembourg company law and potentially the usage law, the CIF law, or any product-related laws. So this would only prevent you from paying the extra increased filing costs to the LBR. But yes, it's a very valid point. So one sees the direction in which the authorities are going. And for now, it's a bit inconsistent, but I'm sure that in a couple of days, everything will be streamlined in that regard as well.
Yeah. So here we were talking about reporting to investors, just proactive communication with investors. What about with regulators? So, for example, with the CSSF, Yann, maybe, what are your thoughts on ad hoc requests, but also regular reporting to the CSSF or other regulators?
Thank you, Monique. Absolutely. So, I guess in terms of ad hoc, first of all, I think that investment funds and investment fund managers need to be able to respond to any ad hoc request from the authorities, and so that really goes back to what we were saying at the beginning: identifying the issues and having an action plan to deal with the issues that arise in your specific situation, in the context of your funds and your funds business. So that's responding to ad hoc requests from authorities. A lot of investment funds and investment fund managers are proactively reaching out to the authorities. So not just, for example, on the implementation of liquidity measures that we mentioned before, but to inform the authorities about what they're putting in place in response to the coronavirus crisis. Then there is, as you said, Monique, there is the issue of the regular reporting that has to be submitted to the authorities. So both at the level of investment fund managers and investment funds. And the CSSF has issued an FAQ on the coronavirus. And in that FAQ, they explain that they will accept an extension of the deadline for submitting that reporting to them, or if the request is duly motivated. So that enables you to get a few extra days for your fund-by-fund reporting, extra days for your investment fund manager reporting, and also the annual reporting that needs to be submitted to the CSSF. So the amount of extension, that depends on which type of reporting. The CSSF has clarified what sort of extension is possible. We're obviously not recommending this request for an extension, but this request for an extension seems to be, well, if you really are not able to provide that reporting in time, then we can give you an extension, but you need to explain why you're asking for this extension.
I think something else that's worth...
Yep, go ahead, Keith.
Sorry. Since we're talking about year-end reporting, the other thing that's come up recently in a few year-end audits that I've been in is the auditors obviously are focusing on going concern issues. So whereas this is normally a relatively quick discussion in the year-end accounts, these are assertions you'd normally give, or representations you'd normally give. Right now, in the current environment, given the disruption to normal business processes, going concern is something that requires a bit more thought and a bit more justification as to how you're going to meet your obligations for the next 12 months. But this isn't particularly a fund issue, this is a corporate issue. Any board of directors approving financial statements need to be confident that they can carry on trading for the next 12 months. And so I just highlight that as that's a topic that boards should definitely be thinking about as they sign off on their financial statements, as to how confident they are and how well justified their thinking is around their going concern status in the changing environment that we face.
Thank you. So we're coming to the end. So I think I'll just do a sort of a broader question to all of you, really, as my last question. So both at fund manager level and at funds, different types of communication, reporting, and other interactions might be put in place now in response to the crisis, and communication clearly needs to be more frequent. So what sort of things do you specifically, suggest that should be done at fund level, so fund board level, but also at AFM Manco level, in order to ensure that the board is sufficiently informed about what's going on and is getting the right type of information and as soon as it's available, or in the timing that is necessary for the board really to carry out its functions and perform its duties.
If I may, I just start. I think it's a very good question, and I think it summarizes what I have been trying to expose now. It is getting transparent information, explaining at board level why you're taking decisions, and to be able to do so, you need to have the information. So I think the board should reach out proactively, again, to its service providers. I mean, looking at it from a fund perspective, you may want to reach out to your two key service providers, which are the AFM or the Manco and the depository, and ask them about their BCPs, their readiness, how they operate, how they ensure confidentiality, how they ensure home office, etc., etc. So just to make sure that you will be able still to fulfill your fiduciary duties to your investors. And this should be in writing, it should be documented, and you might even want to consider to do communication then to your investors about it. At the level of the AFM now, the board, as we know, is seconded by a day-to-day management. So the board should take interest in how the day-to-day management is running the company, and should also, in my view, take very active interest in the financials of the company, because we have under the company law also provisions, on the inadequacy of own funds. So you should be very, very careful about that, because if those thresholds are breached, you might need to convene shareholder meetings to decide on the continuation of your company. I mean, these are for now potentially extreme ideas, but the board is well advised to keep this in the back of its head and be in constant dialogue with its day-to-day management about those things.
If I might follow up on that one, I would say that the first challenge for board members is identifying the issues. And the issues to be identified will depend on the business that you have, the type of fund that you have, the type of investment fund manager you have. I would say the second thing from me would be, as much as possible, as soon as possible, documenting the measures that have been put in place, making sure that the board receives regular communication about what's going on, regular updates about what's going on. Be ready to reach out to investors, respond to investors, be ready to respond to authorities. I would say the frequency will depend very much on the type of business as well. And then any ad hoc issues which come up, which you may need to react to. And so if there are ad hoc issues which were unexpected at the beginning that need to be reacted to, then you might need some more frequent communication.
Keith?
I agree with everything that's been said so far, but I think that's all about the current situation. And I think you need to go back to what we were saying at the opening. This is a strategic issue. This is a systemic change to the market for an extended period of time. And so you need to look forward as well. And you need to think about your business plans. You need to evaluate what you thought was going to happen in your business, in your fund business, in terms of capital raising, in terms of investment plans, in terms of the current portfolio. Indeed, for some funds that actually have capital resources and have investors that want to take risk, the next 12 months may be a great opportunity to do some deals where, frankly, people need to sell, and so there may be opportunities coming out of this market as well. So it's not all about doom and gloom and how do you prevent damage. There's also opportunity for those people who are minded to take that sort of risk and have those capital resources. So I think it's a big strategic issue, and it should not just be about the next 3 months, but the next 12 or 24.
Thank you. Well, I want to thank all the panelists for this timely discussion today. I think we've had a very valuable overview of questions that both IFM and fund directors need to be asking to deal with this pandemic, and to both challenge and to support the management in their entities. ILA does aim to post this webinar online afterwards, along with the document that we've referred to. So the document is called Topics for Boards of Investment Fund Managers and Investment Funds to Consider During the Coronavirus Disruption. This will all be on a new part of the ILA website dedicated to the coronavirus crisis management, likely live from tomorrow. So once it's there, feel free to share it with your friends. ILA's decided to keep all of the COVID documentation open to all, as everybody should be, doing their best to help everybody deal with the crisis. As most of you will be aware, the ILA fund committees have also various documents which they have available on the website, which could also be useful to have a look back. The FAQ for directors of regulated investment funds, the guide for boards of AF and FAM, and various training programs. So have a look at those. This was the first webinar that we've done. We'd really love your feedback. So there will be a feedback form available on the ILA website, and perhaps sent as well to the participants who joined in. Next week, we will have the next session, which will be discussing cybersecurity for directors and the challenges of working from home. So tune in again then. And thank you very much for your interest, and stay home, stay safe, and talk to you all soon.
Thank you.
Thanks, Monique.